Everybody, Logan here again with another video. What a crazy stock market it's been. Today I'm joined with Halcyon again, and we're just going to do a broad market overview for everybody with a lot of our charts. And then we might go into some butterflies at the end of the video. It really just depends on how far we get through everything. So what a crazy, crazy market. If you guys could take the time to leave a like and a comment below. We just hit 10,000 subscribers, which is really crazy to me. It's definitely one of my big goals and has always been. So I appreciate all the support, and I couldn't do it without Halcyon, of course, as well. So I really appreciate that, my man. How are you doing today?
Doing great, thank you. Finally, getting back to starting to cough now. Getting back to feeling, well again. So I was sorry, I'm like literally having post-COVID cough here.
Yeah.
But yeah, so I'm on the feel like I'm finally turned the corner. It's been almost a month of dealing with that. So yeah, here we go. So crazy market, man. January was a nice kick in the nuts, and been a pretty I would imagine a pretty challenging environment for most people to trade through. And in my opinion, this kind of environment, it's you got to be really, really strict with your stop losses, really strict with your risk management, probably more than anything else, because choppy, volatile markets are going to expose your plan if you have no plan for managing that side of it. And this, you and I were just talking about right before this, is what we've seen happen in the prior dips in the market is that it's an immediate retracement, straight down, straight back up, back onto the upward rocket ship, and everything's onward, upward, and there's lots of easy money to be made. And this is acting a little different than what the prior declines have been. And I think that it's probably helpful to get you should be doing this on a regular basis, getting a sense of, what the market's doing, getting a sense of, so that you make sure that you're keeping your focus on the big picture, but then also zooming into whatever it is that you want to trade. I'm going to rip through looking at the daily and the hourly charts, and just kind of see what we see as it stands right now. We'll look through SPX and NDX and the Russell, maybe in the Dow, and we'll check on maybe some big caps and just kind of see what's happening there, where the strength is in the market currently, and just maybe some words of wisdom of being careful as this thing's figuring itself out. SPX, man, like this nice little 10% dip happened pretty quickly, pretty aggressively, and then we had this pretty wild rip back up. And if this was like the prior big drops, let's see, we have them like, here's the pandemic one, straight down, straight back up. Maybe it takes the moving average off, a little cluttered on there, but this one too, kind of straight down, straight back up. This so far is definitely not acting that way. And it's, to me, actually, I was talking to somebody else yesterday about this, and we were saying, this is the point to short. If you're going to be bearish on the market, this is about the area you should be doing that, is taking some shorts. And sure enough, today we rolled over a bit here. Whatever the reason the market is responding to, inflation, information, or otherwise, I really don't care what that is, because it doesn't really matter what the reasoning is behind it. The point is where price and where supply and demand is going is been not to the upside. I mean, this has been a really choppy, garbagey market from really since November. Since November, we've been just up and down, up and down, up and down, all over the place. So if you're a trend trader or you're a swing trader, this has probably been a pretty bit of a challenging, especially January. It's been a challenging January, February here. Maybe got a couple days of some nice little bump back up. When we look at kind of where it is on the playing field, ideally we get down to around the first standard deviation from the mean, which is 42.32. That would have been ideal to have this happen and have this basing take place down here, but we didn't. So we're kind of like in this no man's land here. I don't want to see a bear market, but it would be good to have the market just rip and fly all the way down to this area quickly down here, like go to 4,000 And then we can then start the normal structure of creating another rocket ship back up. And that's really where the real money will be made. This is just eating. This eats up accounts. This is like lots of little stop losses getting hit. For 1 second you get bullish, then it rips back bearish. I think it reminds me of kind of 2011, 2012 trading years, 2014, 2015, a bit like that. Those really, really choppy, very, very grindy markets. The hourly it kind of went right down to where we would expect it to go here, and bounce out of that. But prior to this, normally we would go down and come right back up. Out of here, we'd come down and come right back up, and we're not doing that this time. So again, I would just be cautious, be patient, probably more than anything else, because I know for a lot of traders, sitting on your hands and waiting is not your best attributes. We tend to want to be able to just, you feel like this little monster on your shoulder telling you to hit a button. You got to trade, put something on. You can't be with 90% cash. You got to be in something. And I mean, that feeling is real for sure. That pressure of, you see the market go up for a couple of days, and you have that pressure of feeling like you need to be in something. But you got to wait for your setups to be there. If you're a swing type trader, or wait for the proper VIX if you're more of an options trader, depending on what style you're doing. But you got to wait for those things to line up, versus just that emotional, I got to have something on here. That's just a fast way to give the market makers your money. And if you want to do that, I'm happy to take your money for you instead. No problem. So this is S&P, right? So let's just take the NDX is going to look a little bit weaker. So the industrial Dow is actually probably the most holding up relative strength the best. You can see NDX versus SPX here. The NDX has not bounced anywhere near as well as SPX, and it's quite a bit lower in terms of where it is on the moving averages. It looks a lot weaker. There's a lot more selling going on in here.
Yeah. And
we'll look at a couple of charts in a second that kind of show what's under the hood, and you can see that difference in the weakness between the two of them from looking at the way the shares from all the exchanges are taking place. The volume is not there for the NASDAQ, nor is the supply demand on the share side of things. We'll look at that in just a second here. But that looks pretty weak to me. The fact that it didn't get back up to its 55-day moving average, again, not a great sign here. But again, I prefer we're setting our structure down here. This is a good spot to do that at. This is a weak market, and it's just weak. Look how choppy that is. Golly, just no direction here at all, and then boom, down. So we'll see. Hopefully, we don't have a whole bunch of chop for the next month and a half of just up, down, and it just doesn't look like down. We'll see. We'll see what's going on here, but definitely it's pretty weak. Industrials, they are relatively hanging on better. We're seeing a little bit more strength there. It actually broke above all this moving average for a hot second here, and they got pulled back below it. Yep. But we're still, none of this is out of the woods yet. This is probably one of the healthiest sectors, or one of the healthiest indexes is the industrials currently. RUT and mid caps RUT in particular looks pretty ugly.
Killed.
Again, that's quite the healthy downtrend here. The 20% downtrend, I think, at this point. Yeah, so we can see maybe small caps get a little base building here and then come back out of this. But usually when you get underneath all of the moving averages, what tends to happen is it will drift maybe back up into this 21, 70, 80, 90 range, and then get stuck there, come back down, retest for the spaces, and then maybe come back up. So that probably means we're looking at multiple weeks before that actually takes place, which for those small cap lovers, you just have to be patient. Keep being patient on this. Mid cap, I think MDY is the mid cap index. Yeah. So mid caps are a little bit better than small cap, but not a whole lot. They're dealing with the same thing. Certainly, when we look at the value versus growth side of things, value is by far holding up better than growth, but that would make sense in a down market, as growth tends to get absolutely crushed. So, looking at value plays is kind of where you're at if you're looking for new positions or stocks. Yeah, again, mid caps, there's just not a whole lot that's really all that set up. We don't, most of the indicators we're using are not giving us any kind of big, hey, this thing's about ready to take off. Sector wise, we look at some of the bigger sectors. Energy, obviously that's a different story, right? Look how super bullish energy is right now. Now, when you rip up to the top end, you got to pause for a minute, but again, look how much healthier that looks compared to, say, the index. It's like inverse of each other, right? So XLE looks pretty hot. Financials are looking much better. They're quite a bit more stable than what the markets are doing, but they typically tend to do better during inflation periods. So we'll see how some of the banks do. I think KBE is the banks. Yeah, it's the bank index. I'd expect this to weather the storm better than, say, your traditional small cap values, mid cap values, growths, those kind of things. They're designed to be able to do that. So let's go look under the hood quick of what the indexes look like here. So this is flipping over to handy dandy stock charts. I don't know that I've not yet figured out myself how to make a cumulative advanced decline on the NASDAQ inside of TOS. I'm sure you can do it. I just haven't wasted my time doing that because I've had it set up on here for forever. So anyways, this is the NASDAQ. This is the index here, and we can see this is the actual price of the NASDAQ moving around. So we notice, we had pretty bullish. I mean, obviously it's super bullish 2021, and then 2022 was, started off pretty weak here. What's interesting story is this is what's under the hood. This is the NASDAQ advanced decline cumulative line. Okay, so it's taking every share and giving it a net 1 or net negative 1. So if you, for example, had 100 shares traded for the day and 90 of them were down and 10 were up, that means that for the day we're at negative 90 on that if you add them all up. So then the next days you keep adding and adding all the way through, and you get a line that's created and shows you where supply or demand is. And so from, oddly enough, March was the peak. March of 2021 was the peak of the advanced decline line. Right. So then we've seen since then, it's been basically moving down and down and down. And it really fell from around November to right now. And that is, if that's not distribution taking place and a ton of supply, what this is telling me is that we see a lot of the, when the selling's taking place, it's like 2 to 1 to when we see the buying taking place. So the way more shares getting read up than there are being accumulated here, which is driving this line down. Right here, to give you context, here's the pandemic. Right, this is the drop we had, 38,000 down to market up here. Awesome, thanks guys. 14,000. Right, so there's 30 to 14,000. We literally got lower than that during this most recent decline. So there's some serious selling going on here, and I would not, you need to keep an eye on that and say this is not just like every other decline we've had over the last couple of years. Like, here's a little blip we had for a hot second back in 2020 before the whole October run started. Here's the blip we had for a hot second in the middle of 2021, 61,000 to 47,000. Again, 20,000 difference. And then we go 59,000 down to 13. Like that's a huge drop. Yeah. So you can see visually, it's been a pretty good decline. Now, what I look for when I use this is whenever the actual slope is created, which we see is pretty steep here, but you'll create a slope of where this advanced decline is going to move around. And when it finally breaks the slope to the upside, that's your cue that you can get super aggressive and get super long in the market. However, if you're the type trader you are. To me, this is just, you check it once a day or once a week and see that it's not anywhere near close to what that would be, which tells me that we're going to still continue to see a lot of choppy base building type activity on the NASDAQ, and anything that is trending directional, I'd be really careful and I have a lot of stop losses really tight on those, just because of the fact that this is not showing strength at all. And then if we scroll a little lower here is the New York Stock Exchange. So this is going to be the bigger one, the full advanced decline line. You can see if you include everything outside the NASDAQ, this is their advanced decline. So it is trending down, right? So now you have a pretty good idea where the slope is, but it's not anywhere near as bad as the NASDAQ looks like. I mean, that's a completely different picture between these two. right? So again, that's telling you, focus in on consumer staples, focus in on financials, insurance, energy. A lot of big stocks is what's been holding this up, which is why this doesn't look nearly as bad. And then it'll be slow a little more lower into this thing. Actually, it's up. It's higher or lower. Yeah, it's lower. Okay.
Yeah, this market's just, as you click to that one, I was just looking at the Keltner channels you had.
Yeah. We'll go back to tech in a second. I just want to clarify this point. So here's the, just to give you another kind of clarifying item, this is the advanced decline volume. So it's the same exact deal, except this time you're looking at the volume and not the shares. And so the volume is also showing us that we're having lower highs and lower lows since the month of, since basically middle of 2021. Volume is more volume on the downside than there is on the upside. And that continues to be playing out over and over again here. And until we get out of that rhythm that's taking place or that's been set up and established, I would expect a lot more continued choppy going on. I mean, you can't have the market continue to rise up when there's more people selling than they are buying when those up and down days are taking place. It just eventually that will work itself out in a space that you probably don't want to be. You don't want to see that being the case, because that's going to crush your account at some point. The Keltner channels, you were just referencing that. I like to use these for shorting mainly. I mean, it gives you an idea where support is. And this is literally the 55-day Keltner channels, basically. And so it tends to happen most stocks. They'll move to the top of the channel, and then when they're in an uptrend, they come back to the midline and then work their way up a little further. And they continue to do that up and down. When they break below it, though, like NASDAQ has done here, they'll go below the channel, get stopped in the lower band, come back up to the middle band, and then they roll back over when they do that. NASDAQ hasn't even gotten to that point yet. So that's 14,000. Oh, is this NASDAQ? Yeah, it's NASDAQ. It doesn't give me the number because it's giving me a different, that's ComQ. 14,185. That doesn't seem right, but whatever. That's what the number is here. I'm just looking at the Qs, not the big version of it. But 14,185 is where that number's. 14,727 is that number's currently. And that's where, if we do get up to it, we're going to see a ton of resistance at that point. Same thing on the S&P. So here's an interesting one on that. Right, here's SPX. It had 45.72 was where that middle line is. So when you go below, you typically go back up, touch it, come back down a little bit lower, and then you have your opportunity to see if you get out of the downtrend. Basically, if you just inverse what the uptrend was, right? You go up, touch the counter channel, go back up, touch the channel, go up, you just keep doing that all the way up until the trend's broken. Right? And now we've done that. So we've officially broken below it. And if we roll back down here, that's definitely a complete change in characteristic of the market. Right? That is, you need to be aware that that's going to be, it's going to be some tough sledding for trend trading and swing trading. It's going to be tough sledding there, because as soon as you feel like you got the direction down, it's going to switch and go the other way. Yep. Basically what we've seen so far in 2022 at this point.
Yeah, what a crazy time. Yeah, I like using the Keltner channels. That's one of my favorite things to view the market through. And I honestly haven't even looked at them much of this whole pullback, just because of how, or this correction, just because of how everything's been all over the place. But man, tech does not look great.
No, it looks pretty ugly. I will say, if you're going to use Keltner channels on the indexes, using the 55, it tends to be a pretty good barometer of that. If you're using for stocks,
right,
for some of the faster moving ETFs, you might want to change that to like maybe the 21, maybe 34, but usually you shorten it up a little bit for the stocks that move faster. But the indexes that don't move as quick, that tends to be a good place for finding resistance and support on the indexes. So yeah, man, it's just a beware right now, in my opinion, on what we're seeing, because it's, there just isn't a lot of great setups here. There's a lot of things that basically are bouncing back from being way oversold. I think the only thing you and I looked at was maybe ARC being a potential. Again, this thing got just smashed. Just crushed. For those who were hanging on to ARC, sorry that you were hanging on to ARC all the way through this. Remember, it doesn't matter who front runs the fund. It doesn't matter that Kathy Wood is a little celebrity in her own right, but what matters is that it's not matters about being right. It just matters about making money in this. And things that were high flyers. So this tends to happen all the time. It used to be the case in mutual funds back in the day when they were used all the time before ETFs. But it was whoever was the high flyer the year before tended to very, very, very rarely ever was the high flyer the next year. So, looking at ARC, this has gone all the way down to the lower end of the standard deviation channel. So this is where it'd be a place to look at. If it continues to base down here, I would expect it at minimum to probably try to retrace back to the mean. So whether that's for this one at $100 or up to 120, but that would not surprise me at all to see it go get up to 100 quickly and then roll back over again. But like I said, it's lots of stuff look like this. Just what is this down 75%? What is that? Terrible. 159 to 73. Yes, 50%. Just gotten blistered.
Well, the other thing too is it's squeezing on the daily chart or beginning
starting to
set it up. And if we do see the momentum shift to positive, ARC has been super resilient on like actually following the TTM squeeze. Honestly, more than I would say like the S&P 500. And the second the ARC was squeezing, and at the end of December when it fired short, that just got destroyed. So
one of the things that I like to pair with the squeeze is when relative strength crosses over 50 around the same time as the squeeze is a few red dots in. Yep. See if we can find an example that did this last. It's going to be back here ways, I'm
guessing. A long time ago.
It's been a long while. No, it doesn't even have it on here. Not a great example for that because it was so bullish for a while and everyone went under. But we tend to see when you have, so this is what, if we were not in if her fund didn't get destroyed, what would normally have happened here is you have the big high flyer, it comes back down and then bases for a bit and then takes another explosion back up. That's normally what happens to really, really high flying stocks. That obviously didn't take place with hers. Her fund here got just cratered. So
the other thing too, I would have this trader on occasionally last year, POS trading, and I know he loved this stock. So,
oh yeah, who's that?
yeah. I'll have to have him back on. I haven't heard from him in a long time. I think the market volatility got to him since September. We'll see. Maybe he's been shorting this whole thing. Maybe he's the one causing this, but
he probably is. Probably moving to a size just to push the market down.
Yeah, I'll have to talk to him later this week or next week. See what he's up to.
Well, that's a good idea. Give him a holler. I'm full supporting that. Yeah. Otherwise, looking at other setups, I don't know that there is a whole lot of anything that I was seeing that's been setting up. It's been, there just isn't a whole lot of stuff out there currently. To me, that looks.
When you have so many stocks under their 100-day moving average, it is just a pain train. I'm surprised
it is.
The S&P is staying. Well, and that's the thing too, because a lot of the people in the Discord will be like, "Oh, Logan, you have your put credit spread 11 DTE trades." It's I know the market doesn't look super healthy, but after that much of a correction, I'm still going to stay on the put credit side until it's a confirmed bear market. But yeah, look at energy's a high flyer. Oh, look at that squeeze. I guess energy's a good squeeze example.
Yeah, that was a good one. It's had two of them actually. So this is a good example of a stock that goes. Let me see if we found one. So this would be the kind of ideal one here. So you get an RSI that gets very oversold. And then you get a squeeze taking place as it's working its way up. And then as it crosses back over at the same time the squeeze fires long, that's where you have some super powerful moves that take place.
Yeah.
Again, this thing is such a high flyer that we actually bought a bunch of this stuff. And there you go. So not a bad. Again, that's been a heck of a trade. It's been the best trade of the year so far. Look at that, from 2022 started what, 57 or so and up to 70.
Yeah.
And there was definitely right at the end of the year, analysts who were listing, energy is overdone. It needs to take a breather and calm down. Oh yeah, it's going to go up 10-12% first. Just kidding.
Yeah, it's almost up like 20% since it's like when we
yeah, I mean, what was it, 85%? What did it do last year?
Yeah, we were chatting about it. I remember when it pulled back for a little bit, and you're like,
$37. Crazy. 37 to 70 since 2021.
I trade a lot of ERX, which is just the 2X edition of XLE. And that thing got smoked during the pandemic. But I remember like my uncle was picking up shares at like $8 and selling them at 14, and now it's 44.
Yeah, look at that squeeze of this thing, man. Oh,
just killing it.
Jeez.
Nail, yeah. Nail is so technical. I love how
this is the home builders. Is that what this was? Triple home builders?
Yeah, the triple X home builders ETF. My dad has a boatload of this that he bought at $11. He still hasn't sold. Like, well, probably soon.
Does Home Depot look like? Oof, that does not look good.
Right.
Yeah.
100 day, like just getting killed. I did actually look at Lowe's earlier today for the first time in a long time. So it's funny you're bringing it up.
Yeah, I mean, there's a good base here, so I just want to see, let it base, that they can break out of the base with volume. That's what you're looking for, and then it's onward to the races. But for me, when I'm looking at these stocks, we need to see volume coming up, especially if you do volume with the squeeze, and then you can look at your stats, see how are you compared to what the average volume is, compared to what it's doing currently. Gives you a really good idea. I'm trying to think, who was a high flyer today that we can get an idea of who that was. Public gainers, there we go. Good old ARB. Love that stock. What the hell is that?
42%.
So here's an example. Yeah, all right. Yeah, look at that. It's so off the chart, but it's up 566% more than the average daily volume on this thing. That's some serious power behind this move.
Oh yeah, look at that.
And that's, what do they have happening? Who knows?
Like the news, I don't know. That thing's rocketing though.
Look at that thing. Breaks out of its base and just goes absolutely ham.
We had that with Generac, which is another stock that's declined like 60% since I remember that trade. We put that trade on around like 400 in September or something.
Yeah, we had it back here.
Yeah, way back. A nice little like 2 week.
Look at that. Goodness gracious.
On that first like mid-August, early September or something. And yeah, like right around then we had that.
Oh yeah, because there's a squeeze. We did a put credit spreads, right?
Put credit spread because of the squeeze, and then it's just getting obliterated now, down 50% from the highs, like just casually, like everything else.
Well, I think
that TTM squeeze.
I forget where I've heard this from, but there's a stat that's basically, I think it's the stocks that were the leaders, when they finally crack and break, that there's an 80% chance that they drop 50%.
Jeez.
And if you go look at almost every leader going into this thing, most of them are in that range, which is kind of crazy to think about that. They're down 50%. Half the value. Whoop.
Just gone.
Peace. See ya. Yeah, so we'll see how that keeps setting up. And, but I don't know. With earnings coming up, who knows what the hell's going on with that.
Yeah, earnings with so many things. I just feel like too, if they're at the bottom of the standard deviation channel, usually earnings gives them a little boost. Usually, just because stocks get beat down so bad, unless they're like, I mean, Facebook's one that declined quite a bit and then just got absolutely murdered on earnings. I mean,
out of the channel, yeah.
Who would have thought that like a big tech stock like that would have such a poor reaction?
Look at that, going all the way to the top of this channel, 384 down to 228.
50%
in a pretty short period of time. 3 months. Brutal.
Market leader, that's like a 50% decline.
Jeez.
Just brutal.
Yeah, look at that gap. It's got to get filled at some point.
It's brutal. So yeah, I personally like Facebook here. I think I'd start picking up. I would start some sort of bullish position, whether it's like a leap for 2 years, just with a very small amount of my account, just because I think the value's there. The risk to reward.
Well, yeah, I would say that's if you have a lot of patience to sit and wait, that
Yeah,
would be the way to look at it for sure.
yeah, just
I think I'd be sitting there right with you. It's tempting to go try to scoop up a lot of these big high flyers that are sitting at this weird, the very bottom of the channels there.
just so
Like Generac, and it's a good example of finding a handful of those guys. Because that's a, you know, this is a good risk reward entry here. You look at adding, you add your position. You don't have a catalyst here, so I added my position. I'd probably put a stop loss of about 272, and let's see what happens. But with earnings coming, I personally wouldn't trade that just because earnings are right here. No idea what's going to be going on with that. Chaos is what typically happens.
so wild.
Well, homie, I need to get some food, bro. I'm starving.
No, I appreciate you coming on for another video, and just to give a
Yeah, let's do another one quick here. And I'll just kind of go over some of the plays I've been doing lately.
Sure.
I've been, because of seeing kind of the wildness going on here, I've been doing a lot more stock trading lately.
Yeah.
So I don't have to deal with the being incorrect on the time of the trade, with which options are a little more sensitive to that, obviously.
Yep.
So I will talk through what I've been doing with that. It's been, yeah, I've had a good February so far with it. We'll see how that keep that running. But anyway, there you go.
Sweet. Well, I appreciate you coming back on, man. Well, like you said, we'll do another video through this week, and then I think it'd be cool if we did like a weekly one of these, just on like a Wednesday.
Just to review. Yeah.
Review the market for the week, and just so that everybody can get a nice feel of where we're at and kind of where we think it's heading. Now, granted, I'm a little more bullish, even though like we're not seeing that currently. I'm personally more bullish for the entire month, just based on like the accumulation, like the basing that we're seeing. Even though the advanced decline's not 100% following that, we are seeing a lot of nice basing, so that I can start taking some like low risk, high reward shots again, which has not been the case for the last month. Like even my main 11 DTE strategy, it's been doing really well through this, but which is really cool. But they're, seeing the rips, like you're up, you're down, the market's up 2% one day, then it's down 1.5% the next day, and you're like, okay, when should I hedge? Should I hedge today? Like it's just way more of a mental toll. Like trading's definitely taken more mental capital from me, I would say, in the last 2 months than it ever has before, just based on the sheer nature of the volatility as of lately. It's just something that you really don't think about, especially when you've had, I feel like there's a lot of people who are kind of used to that, like buy the dip every time we come down to the 50, we'll be back above the 9 in like 2 days, and that hasn't been the case. So it's just a really interesting market to kind of maneuver, and options have definitely been a little bit more mentally draining, but roll with the punches. We'll get back at it soon.
Yeah. Well, I mean, I think this thing too is like keeping your perspective on where things stand in the big context.
Yep.
Zooming out a little bit, because we all tend to, when you're doing very tight trading during the day, you tend to zoom into the minute ticks, and you can lose the perspective when you get too close sometimes. So yeah, not the worst idea to do this weekly on that. Well, I'm gonna go grab some food, Holmes, and start the evening up here.
Sounds great, man. I appreciate coming back on.
No problem.
That'll be everything for us in this video. Make sure you guys check out the links in the description if you want to come trade with us in the Discord. And then also don't forget to leave a like, a comment, and then subscribe. And maybe we can get to 15,000 subs by the end of the year. So, but I do really appreciate all the support as always. And I will see you guys in the next one.